Hello, I'm Piotr from CasperLabs. I'm project manager at CasperLabs, and today I was asked to provide you a little bit of details about the project itself, company, and what we basically do. So I prepared just a couple of screenshots from various web pages that we are available. And why I'm doing this, I would like to show you the various ways that you can access the knowledge, the information that we offer to you. And this knowledge is basically about our platform. So the platform at CasperLabs is for smart contracts developers, for the users. We leverage the possibility to build smart contracts based on Rust. And this gives us a lot of possibilities and cool features that I just want to quickly mention. So we start with our Casperlabs.io webpage. There you can find the high-level information, a little bit of marketing stuff, where you can see what we do from the bird's eye view. We also spawned the blog where you can have all the information that are more detailed about the technology, process, timeline, and so forth. It's casperlabs.io/blog. Then we are developing and working extensively on our docs. So these docs are aimed mainly at smart contract developers. So you will find there, like say, ready to be used instructions to create your own smart contracts, to start with the platform, to onboard yourself with the concept and start writing the code. It's docs.casperlabs.io. And we are also present at GitHub. We have two organizations. One is CasperLabs, where you will find the core features of our platform. And we have also a group that is dedicated towards the community. So all the community-facing projects, the open source ones, they are listed there, and this will be growing. And here, what I present you is the screenshot from the YouTube. We have extensive YouTube playlist with our workshop recordings. So basically, you can access the session with me and Maciej, who will be presenting later. And then you see how, in practice, we can spawn and execute tests and demonstrate the smart contracts. And as for the tools that are available for the developers already, what we have is Clarity, which is basically and primarily our blockchain explorer. You can create an account. You can fund your test account with some tokens in a way that you will be able to query the network, deploy smart contracts, and check all the features that we present to you. And also, in addition, we launched the new project. It's called Casperlab Signer, which is a tool that lets you to, it's like an extension for the Chrome and Brave browsers. It lets you to sign the smart contracts from the web. So you are basically enabled to build your Web 3.0 applications with our system already. And let me just switch. Whoops. All right, so it's a bit I hope that you can read it. If not, I will just summarize this for you. Why I'm saying all of this too is that November we launched our final testnet. We call it Delta. So what you will be able to do, we basically want from you to break the network. So we have a set of goals for the community. And the main goals, as you could see, is to disrupt the network. So I will just read them quickly. So disrupt the network for the longest duration with an equivocation bomb. Then disrupt the network for the longest duration with the transaction spam attack. Then you have the possibility to cause the biggest amount of slashing with equivocations, and cause the orphaning of the longest branch with equivocations. So basically, we want you to stretch the security of our network to see how secure or insecure we are. And for the brave ones, we provide the prizes. So we have in total 75 million of tokens that could be distributed to you. I strongly encourage to check the materials that are available on our website and enroll and try your luck, and hopefully we'll see you online cooperating with us. That would be all for me. Thank you. And I will hand the microphone to Mark, who will show you a little bit of magic. Live is always hard. Mark, your mic. The criminal is here.
Oh, hi, so I'm Mark Greenslade, working for CasperLabs at the moment, and I'm going to do a demo of the network, a live demo, and show a few slides. So this morning I did sacrifice to the demo gods, so hopefully it will go smoothly.
Hello?
Hello, testing, testing. Okay, good. So, got my little recipe here. So I'm going to kind of set up a test network on my laptop. It's only got 8 cores, so I can't really like go to 40 or 50 nodes. So I'm going to keep fairly small, so it'll be like 10 nodes. And I just run through the process setting up a network, and then we can watch it run. We can do some transfers, etc. And then I kind of segue a little bit into some of the architectural aspects. So, okay, so we, as part of the Casper Node core software, we have a utility called, has previously been called NCTL for controlling the network. And that gives us a whole set of commands that we can execute from the command line, one called the Casper Assets Setup. So this is going to set up the set of assets for a network. I'll just quickly touch on what those assets are going to look like. So first of all, we can look in this folder here, which has a whole set of binaries. And you will see the Casper node binary, Casper client binary, and a whole set of WASM files. So the WASM files are smart contract binaries. Some of those WASM files are system level smart contracts. Some of those are user-facing contracts. So we have this distinction between system and user-facing contracts. Another set of assets are relating to the chain spec. So when you start up a blockchain, you need to parameterize it essentially. So we have this mechanism for parameterizing our chain. This is what's called our chainspec.toml, which is a config file. And here we set things related to the consensus protocol, storage mechanisms, smart contract engine, parameters that they require to self-configure. So a hash of this makes its way ultimately into the Genesis hash. So this is like a level 0 artifact for this network, so it's super important. But we can change parameterizations that affect chain behavior, both on a local node setting and a network-wide setting by muting some of these settings in here. So this is why, in our incentivized testnet, part of that process will be trying to optimize these kind of settings. We also have within the chain spec an accounts file. So this is a set of accounts of the initial validators who are bootstrapping the system. Plus, in this particular case, right at the top, we have a special account, which is the faucet account. So we have a network faucet account plus the initial validator set. So this, again, is like a level 0 primary artifact that goes into the whole Genesis process, because prior to Genesis, or as it's, you know, in its very initial kind of spin-up phase, there are no accounts on this system. So this will initialize a set of accounts and also auto-bond those validators, because the Casper system is predicated upon proof of stake as one of its security mechanisms. So this will, accounts.cv will contain information about the initial validator set. So also within the set of assets that our utility establishes for us are, on a node-by-node basis, the config file that particular node is going to be configured with when it starts up, and that includes known addresses of other validators, unless it's a bootstrap node. So if it's a bootstrap node, it knows nobody, but there will be like M of n bootstraps, and then the rest of the nodes, the validator nodes, will have the public IP addresses. So when this network spins up, we will have a set of bootstrap nodes and then a set of other nodes who will know about the bootstrap nodes. So this configuration file becomes very important anyway, but even more important when you're spinning up the net from scratch. Okay, so that's the network assets. Now I'm just going to create a 10-node network and then start that network. So whilst that's spinning up, let's go into the presentation. So this is a set of network actors that you might kind of, from a very high-level view, taken in a global kind of sense. And we subdivide them into 3 kind of segments. The clients, so this could be people in this room who just happen to have a wallet, could be brokers, could be trading desks, whatever, who are dispatching transactions to the network. We have, in the middle, we have a set of nodes that are read-only nodes. So one distinguishing feature of this network will be that there will be a set of read-only nodes serving queries so as to relieve validator nodes, which are our bottom layer here, where the consensus mechanism is live and active, and where the proof of stake smart contract is live and active, and where the risk capital is obviously bonded. So this middle read-only layer is totally voluntary in one sense, but it's going to absorb network load from the validator layer. So just looking at clients, obviously it's quite a messy space in terms of clients, so both regulated and unregulated entities using various different software to interact with the network, some of which will be incubated by CasperLabs, some of which won't. So it's quite a chaotic layer. The read-only layer is a little bit more ordered. We imagine that there will be many entities running standard read-only nodes, just taking software provided by CasperLabs, but also entities that will augment that software. And the augmentation process is effectively, you spin up a node in kind of like raw read-only mode, and that will give you an event stream. And from the event stream, you can build up a state lake. On top of that state lake, you can build a query engine, or maybe you want to build a, you know, if you're doing compliance, you might want to build up a compliance reporting engine on top of that. So that's kind of the read-only layer. And then we have our set of validator nodes. We assume there's adversaries amongst the validators. But this is the consensual core of the system. And consensus in this setting proceeds in a series of era-scoped leader-based rounds. And proof-of-stake-based game theory incentivizes honest node operators. To become a validator, one must submit risk capital. So it's kind of classic proof-of-stake. And obviously, in this setting, non-trivial SRE requirements are assumed. So that's a kind of overview of the network from a few different perspectives. Let's go back to the command line. And let's do, so we have, so let's have a look at the node states. So we have 10 nodes running, and I just said, okay, let's have a look at the status of each of those nodes. If I just drill down into one of those guys here, we can see that it's got a set of peers. There's a Genesis root hash, which hopefully is identical for each of the nodes, yes. There's a chain spec name, so that chain spec name is part of the chain spec configuration, so that's like a primary artifact just in itself. We've got version of the API, standard stuff, but we've also got last added block info, so this is information about the last finalized block. So there is some kind of consensus process happening here, even in an ambient state. So this network is just running in an ambient state. There's no actual client-side work being dispatched to the network, but we can still see that blocks are being finalized. And more important, you can see this era ID. So initially that would have been at 0, now that is at 3, and block height is at 40. So even in a null state, this network is going through a consensus protocol. So let's give it some work. Okay, I'm going to give it 100 transfers to do. So being slow. And we'll dispatch those transfers to kind of nodes at random. Okay, so that's going to start just pinging to random nodes transfers between the faucet account and test user accounts. So that is now some work happening on this network. And those those transactions have been dispatched. So let's go and look at the node states again. Okay, right, so now you can see height is 71 and era ID is 3. So just by virtue of dispatching a whole set of transfers, the block height is accelerated, right? And the number of eras has also ticked over. So we can see this system is actually doing something. Let's do another transfer, but we'll do this, and we'll just do 10. So this time I can see, as the transaction has been dispatched, I can get their transaction identifier or hash. Let's go and actually look at one of those guys. Okay, right. So this is a transaction that's been dispatched. This is on-chain information regarding that transaction. So we have the classic kind of hash. We have header information, which talks about gas price. We have a TTL setting, that's time to live. So you can dispatch a transaction and give it a time to live, which really is like time to finalization. If it doesn't finalize within this time limit, then forget this transaction, it's dead. We have settings like the account identifier. Okay, that's kind of normal stuff. Then we have an interesting section about payment. So each transaction on this network, the payment model can be customized. So you as a DApp developer can build out some kind of customized payment model so that your end clients do not have to pay the gas for these fees. Now, by default, there's a standard payment WASM. So if you don't specify that, that's going to be executed by default, and it will be the dispatcher who will pay. But you have this mechanism and possibility to override that. So that's kind of a feature, right? Then we have some session information. So every dispatch to the network is considered as a session, and so you get, for example, the arguments that you've passed during the course of that session will be recorded there. But then what we have is another section called approvals. For every account, you have a set of purses. So it's not like one account has one purse, or one account, account balance. There's an account as multiple purses. There's a special purse called the main purse. Now, if you don't, if you do nothing and just send a kind of vanilla transfer, the system will revert to the main purse. But you have this option for a particular account to specify or define multiple purses, and each purse can be associated with a different authorization profile, which is another kind of feature that's slightly unique, I think, to this chain, or at least is relatively interesting, I guess. So in this case, we've got an approval section. So this is where this dispatch was approved by the chain. Now, I didn't actually specify any third-party accounts that may need to participate in some kind of multi-sig process to approve it. It was just a vanilla dispatch. But you can, using this system, configure any transaction or any deploy to require a multi-sig. There's also, and it's not really kind of noted here, you can also have transaction dependencies. So I could dispatch transaction 1, transaction 2, transaction 3 at different points in time, but kind of point backwards. So it's like transaction 1 must finalize before transaction 2, which must finalize before transaction 3. Each of those transactions could be multi-sig. So that's kind of interesting feature. And then we have a section about execution results. So this is where the smart contract engine kicks in, because the smart contract engine is mutating the state of the system. And so we have the block hash, i.e. the block that this particular transaction was included in, but also the result of the smart contract execution engine. What we see are the effects, the state transition, effectively, that particular transaction caused. We get the kind of fine granularity of the set of operations that were executed, and then the set of state transformations that occurred as a result of executing those operations. And then we have a cost. Probably might not be able to see it, but it's actually set to 0 because this is what's called a WASM-less transfer. So this is using a system contract. Right now, the cost is 0, but through the incentivized testnet, this will be parameterized, and you will pay some kind of minimal cost for transfers. Okay. Now, I want to get that block hash here, and I'm going to do... Okay, so this is giving me information about the block that transaction was included in. So we have the hash, obviously, and then we have header information. We have some proofs. We do not have the body. The body of the block is kept on chain. We don't want to be transferring that all over the place. But it can be. You can request it. Now, in the header information, we see kind of classic block header information related to the parent hash, so the hash of the previously finalized block, the state root hash, so what is the state root after this block has been applied. We have the set of deploy hashes that have been included in this particular block, and we also have the era ID and height. There's a flag here that you probably can't see. It's called era end, and that's set to null. The consensus protocol moves through a series of eras, and at the end of each era, the dynamics of the proof of stake contract kick in. So if any validators have been proved to have be Byzantine, then they will be slashed at the end of that era. If they have been proved to be honest, they will be rewarded. There is a bonding period for any era payout and slashing. So it doesn't happen immediately. I think at the moment it's set to 3. So you have to wait 3 more eras before you will actually either get paid or slashed. So there's this kind of slightly extended time frame. But if this block was actually the block that was executed at the end of the era, you would get this era end setting would be set to true. And those kind of blocks we call switch blocks. So switch blocks have a kind of elevated status in the system. Okay. How are we doing for time? Do we have another few minutes? 2 minutes? Okay, I'll tell you what, I'll just wind it up because I could go on. So just some kind of fairly standard software-y kind of stuff. So each node exposes a set of API endpoints. Those API endpoints we've scoped into different kind of contexts, if you like. Some of those API endpoints have to be opened if you are a validator. All the rest are ultimately optional. You know, they're only, for example, if you're running as a validator node, the network set of endpoints need to be opened up because you will be gossiping and sharing information amongst the validator set. But you don't need to open up most of those other endpoints. It's entirely up to you. You know, so it all depends on your SRE setting, your risk profile. Now, read-only nodes, conversely, they will probably open up quite a lot of these endpoints, but they won't be opening up the network because they can't communicate consensus information with validators. They don't have the authorization to do that. They're not part of the active validator set. So their node identifiers will be rejected if they try to somehow participate, and they will be considered by Xanthi. So that's the API. And then lastly, just a quick note on how the node software itself has been designed and built for those who are interested in this. So you have one kind of software stack which will run in multiple modes. So it's not like for each mode you've got a different binary. It's the same binary that will kind of mutate in response to what its role in the network is. So if you're in a read-only setting, you have a set, I've just outlined a set of components here, API server, contracts, fetcher, etc. So that's a set of components that are active when you're running in read-only mode. In validator mode, you have other components that become active, consensus, era supervisor, linear chain, for example. Storage is a component that's like kind of regardless of the mode you're running in. And at the core of the node software is what we call a reactor. So it's written in Rust, and it effectively wraps the Tokyo library, which is an asynchronous networking library, and is an asynchronous event bus. So it's not like component A talks to component B. Component A sends a message to the bus, and then the bus routes that message to another component. So components are completely decoupled from each other. And components can dispatch messages both to components on the same node, to components on other nodes. It can also dispatch messages that do not need to be, there's no response, so we call these announcements. So it's got a slightly different kind of way of doing things, I think, to other networks. And that's it for me, thank you.
Thank you, Mark. I need? No, I don't need. Yes? Okay, can you hear me? Hello, everyone. My name is Maciej. I work at CasperLabs. I'm a smart contract developer, and I'm responsible for growing our ecosystem. I'm super happy to be here, and I'm gonna lead the discussion panel about the hottest topic, which is DeFi. We'll have the lead people from the DeFi space that know everything. If they don't know things, it means that no one knows that. So I'll just introduce everyone, and let's the conversation start. First of all, I want to introduce Patrick Hazer, who is a senior cryptocurrency trader at Crypto Broker.
Thank you.
Then Maxim Belashevich. Maxim is the founder and CEO of the Sentiment, which is the Bloomberg of crypto space. Then we have Mona El Isa, founder and CEO of Avantgarde Finance. Also, you might know her as a founder of Melonport. We have also Stani Kulehov, founder of and CEO of Aave. Stani, are you with us?
Yes, I am.
Cool. And Roger Davin, head of digital finance at Inacta. Okay. Thank you all for being here. So we will start with the short question. What is DeFi for you? You don't have a mic. Maybe I'll start with what is DeFi. We'll just describe what is DeFi, and then you'll do a presentation about stats and of DeFi, and then we will move to another questions, okay?
So I try to approach this question more on the financial side because I'm not a developer, so I throw around money and not code. To me, DeFi is giving back the responsibility and the decision of making an investment back to the investor and not to the big banks and broker companies, even though we are a broker company. But I mean, it's a mind change that you can invest in products that are quite complex but have some proper revenues on it, but you do need to understand what you invest in, and this is DeFi for me. So it's your own responsibility to invest.
For me personally, DeFi is another building block on our ultimate mission in crypto space, where we build in religious communities, small big ones, some values for shares and values for nothing. So it's a very essential, very important building block, and it's nice to see it working. So it's like for me personally, now as a company founder or project founder, DeFi is an amazing source of data. We are all about data, knowledge data, and one can see, well, we saw effect. Okay, now, Susan? Much better. Okay, shortly again. For me personally, DeFi is important building block on the ultimate mission for crypto space, which blockchain part of crypto space, where we take ownership, build in groups value, even share the value fairly, transparently, competitive between each other. So DeFi is good, it's working, nice to see it. For founder of analytic company, it's amazing source of data. We had this in 2017, where we could build or see in a way of data how human behaves personally in the groups and make out of it investment decisions. DeFi is even more amazing. Yeah, it was very short, very intensive, and still generate even more data every day. So we are part of DeFi. Maybe we'll cover that. Yeah. You prepared some questions, so we'll see what's coming next.
Yeah, this seems to be working. Okay, yeah, so for me, there's, I think, two parts, or I think about DeFi in two parts. So for me, it's a new financial infrastructure that is still very much emerging and interconnected. One of the aspects I really like about it is the fact that it removes the need for heavy and complex intermediaries that we have in today's financial space. So for example, if you want to make a loan today, you have to go through a bank and a credit score and a million other intermediaries, and this all adds to the cost. If you want to invest in a fund, you have to have a fund administrator to make sure that the manager of the fund behaves correctly. You have to have a custodian to make sure that he's holding the assets and not spending them on yachts and private jets and stuff, and so on and so forth. And what DeFi basically allows us to do is to, I guess those financial intermediaries essentially help establish trust between financial participants, right? And so one thing that I think is really exciting about DeFi is that we can now automate that trust through smart contracts. The other aspect that I think is really amazing is, and a couple of you touched on it, is the fact that, yes, sure, it's your own responsibility, but more importantly, I think it's permissionless, which means, we've seen many examples in the last couple of decades where people cannot buy or sell things they want to do. I mean, maybe in Switzerland that's not such a problem, but in emerging markets, in countries where governments are getting themselves into massive amounts of debt and stuff, people are not allowed to invest in just a stable currency, to preserve their wealth. So I think the fact that it's permissionless gives everyone an equal chance to decide what their finances are. It gives them the right to own their finances and also to access things which may otherwise not have been accessible to them, because DeFi also massively lowers the barrier to entry, except when gas prices were very high in July.
Yeah, obviously I'm not a developer as well, just like Patrick, I have a background in finance. To me, DeFi space at the moment is a very interesting concept. It's a playground where we learn new things, but I'm still very much on the skeptical side on whether the learnings that we have may not be one of those that you write off later, say, yeah, I paid a price for this experience. That is something I'm a little skeptical. You may all remember the ICO bubble that we had in 16, 17, 18. To me, the DeFi space looks very much like that time, just it's now DeFi, but in principle, good things came out of ICO, out of the ICO bubble. Not all things were good, some things were good, and I'm quite sure the same experience is gonna be repeated, just this time it's 4 letters instead of 3.
Stani, what is DeFi for you?
Couldn't hear well.
I ask, what is DeFi for you?
What is DeFi for me? So,
sorry, DeFi, maybe that's pronunciation is better.
yeah, I think DeFi is kind of a way to, enter into the financial world where, there's no restrictions in the sorry, there was some echo. So in the way that if you look at traditional banking systems and how they're working these days, there's a lot of complications because there's a bit of missing piece of interoperability. And I think DeFi is kind of a place, a big sandbox where this interoperability actually exists, and you can practically build anything in terms of that helps the end users or makes transactions, finance more efficient. And I guess it's more about giving more choices to the end users in the sense that any kind of applications could be built, but also you as an end user can decide where you go, and basically voting with your wallet is very easy. And by voting with your wallet, I refer to an action if you find better services, better yields, something that is more important to you in the on-chain ecosystem, not particularly in DeFi, but in general, it's very easy to switch your, kind of like application that you're using. So it's all about freedom in my view, without giving up, your custody.
Okay, thank you. So as the next thing, Maxim prepared for us some slides and short DeFi in numbers. So Maxim?
Yeah, well, it's, yes, thank you. It's very short and just since I started to work on sentiment, I fall in love more and more with so-called data journalistics. When you tell things, but you use data, use as a charts. For us, it's like time series, but without going too much details, where you see how things evolve over time and you try to make a story out of it. When we're talking about DeFi, the most known, or mostly known number is Ethereum locked, how we call it, half a year or 1 year ago. Actually, it's not locked, it's more Ethereum committed to participate in protocols. And there is nicely known numbers. It was between, actually now it's around 14 billion. The thing is that it's a double accounting, and it's unless you're really good into data, how to get the data, you take this number as it is. It's not 14, it's around 9. Yeah. And this chart shows this data. It's not from us, it's from the bank, and they did a quite good job. It's not perfect yet, but it's a good one. So whenever you see at locked, think about it's at committed, how much commitment on a Ethereum network of people who put in different kind of protocols. Yeah, it's not locked, they can pull it out in a matter of a few blocks, but they committed, so they take risk and they get reward for it. And there is double counting, so if you see the number at locked, at committed, you should remove something from it. At the moment, it's a very substantial amount, 9 billion. I remember the time it was less than billion. We were firing a lot when we get 1 billion. It was less than half a year ago, and it skyrocketed. When we go to the moment now, you said nicely, and I've been in during ICO time, it was exuberance, I think we use this word. And I hear some people using, did we hit the exuberance now? And it's a very relevant question. Can we go to the next chart? Thank you. Before we go to exuberance, there's a difference between ICO 16, 17, 18, and now DeFi space. Protocols generate revenue, real revenue. And it's a huge difference to ICOs. None of ICOs generated anything except white papers. Us including, we also did ICO. But yeah, we build the product. And just look on the right side. Yeah, it's kind of in data science an outlier, but it's just a leader in the DeFi space. Uniswap generates 30 million, I think, on a monthly rate, $30 million revenue, which belongs to not to any single authorities. When we reflect back to 16, they were Coinbase leader, or Bitfinex also was leader. And their revenue around billion a year, if I'm not mistaken, plus minus. Then came Binance that disrupted them a little bit because they introduced token and you can pump it and you can trade it. So they pull a lot of revenue to them. But Binance still a very centralized entity, and I don't think they will ever be able to decentralize. It's very hard to get rid of such much revenue per month. Now Uniswap, from the very design, from the very beginning, it's not centralized. All revenue, whatever is generated in trading, and trading is human nature. We always like to predict the future. It is decentralized. It is 30 million a month now, and it's growing very fast. And you cannot compete with it, just because it's very efficient, not efficient in terms of speed of execution of your trades. Centralized exchanges are better, but to cut the story short, Uniswap is leader, it's not outlier. There is a SushiSwap, it's a kind of fork, and as we know in crypto, forks generate up about 10%, so they do it the same, above 10%, in 15 in this case. And then others. Aave is also here, and Stani, correct me if I'm wrong, the data is that you generate 1 million revenue per month. Yeah. Also decentralized, yeah? Also belonging to community one another way. All combined, we see that there's a huge difference now. DeFi protocols, platforms, they generate revenue and it belongs to participants, one way or another. ICO, there was nothing like this. Participants took huge risk and huge reward if they were lucky with the token. Here's a different story. Now to the next chart, please. We did have the moment of aha moment of exuberance, and this is transaction fees. That's exactly what we see. Green line is the price of Ethereum, and the blue line is the transaction fees. Yeah, they correspond pretty much. Exactly the highest transaction fee comes exactly the same, plus minus 1 day, when the Ethereum price was, I think, around 400. I think even 480. Is it exuberance? Yes, to some degree. Is it bad? I don't think so. At the moment, anyway, we came down. And these spikes actually is mostly when the community got super excited about the project. The first one, I don't remember exactly. I think it was IFIs and probably Uniswap is the last one, and something in between, yeah, where we hit the top. And the next chart. So when we see that the one before revenue is big enough and it's actually increasing, the transaction cost spiked, went down. The next one, which is not so much discussed yet in the space, even though participants know about, there is more and more imported Bitcoin to Ethereum. For the purpose of DeFi space, important is very important collateral. It's maybe the most important one. Ethereum the second important, but Bitcoin is the one which can hardly fail under difficult to think conditions why Bitcoin should fail. Is Ethereum still a kind of, you can think of something, crazy ideas. And the moment when Bitcoin getting imported to Ethereum, it's still, I think, not used maybe by anyone in the room, but it's used on many platforms. It's experimental, it's a kind of risky. You need to know what you're doing, and it's growing very fast. And at the moment, it's one of the biggest use cases which might accelerate the usage of the next wave of DeFi space. Yeah, so based on this chart alone, I'm not sure if we hit the exuberance. We might see it next wave. And this next one. Volume of DEX traders, because of trading is together with lending is one of two most use cases in DeFi. And I'm not talking about lending. I think maybe there will be questions, or Stani can say much more than me. But trading, yeah, we saw exuberance, we saw huge volumes who went down. Amount of trades, if you see the second chart, yeah, this is where difference when you look into the data carefully. It by no means decreased, it's just, yes, stabilized, a little bit up and a little bit down. People get more active because transaction fees went down, so you can do much more things. So, and we are staying on a very, very high level if you compare to, I don't know, 6 months ago, 1 year ago, it's 10 times more, 20 times more. And the next chart, I think maybe it will be the last one. Yeah, I combined here now the network activities. So now we go into details. If we take some projects, Aave, which is called here Lend, Uniswap Uni, IFI, Kyber Network, and REN. REN, the important BTC is REN BTC. Now, just look at this chart. What was in the beginning of the year. Yeah, there was actually already at that time activities, those who were in the space. And I remember doing a presentation on DeFi in Osaka 1 year ago in DevCon. It was already a kind of trend, and we expected it to happen. We didn't expect it to happen in this huge way, but we expected it to come. But things exploded the last 6 months, and they stay very high. It's just one day, lately there was a RenBTC, a lot of activity. Another day now in Uniswap, they do voting, and there is a lot of activity. Each activity means participants of the network, they do it because they believe in either in their profits or in the benefit of this protocol or their commitment to protocol for some other things. But they're committed and they spend a little bit money on transactions, they spend their time. And the activity stays as high as before, nothing changed. It just changes between protocols, flow from one to another. And yeah, if you look any other project or any other network, blockchain, you will never see anything like this. And the last. This is a bit different. It's not on-chain. All before metrics they were based on on-chain, which we collect, split, and categorize, label. Here is social data, because in Sentiment platform we also pay big attention to social data. We collected from thousands of Telegram channels, Twitter, everything, what we can get our hands on. And as I say, 1 year ago when I was presenting in DevCon, it was already kind of very growing, strong trend. But now, if you look at 1 year ago, you don't even see these numbers. And I remember it was a very big increase. Now it's not, it's like a dwarfed compared to what we've seen on amount of talks and discussions in all crypto channels. And it didn't fall down. Well, it did fall down to some degree, but the amount of social activity is high. Social activity is high, on-chain activity is high, commitment of people means in both their token and their doing is high. I honestly don't see we have seen the real exuberance yet. Yeah? And I would like to know because, yeah, just because of data I'm observing. And of course, I would like to learn during our discussions what might be the next explosive or catalyst growth for the next phase. Okay, that was a data-driven story.
Thank you very much.
Yeah.
How can we compete with people that know a lot of data, that much data?
Oh, easily. If we refer to Nassim Taleb, knowing too much data doesn't mean you can act in the right time, in the right way. Sometimes knowing too much is not good at all.
Yeah.
So
okay,
no
so there is a question I want to ask all of you. I myself, I'm people that was enabled to do these financial investments in DeFi because also I'm a software engineer. It's easy to me to browse it through code and see that something is not a scam and just put my tokens there for a while, farm a bit, go somewhere else. So I personally, my strategy is to hold stable coins and at the moment provide the liquidity at Curve because this way I don't lose, I just earn a bit. So my question to you is, what is your strategy? What kind of platforms do you use? Where do you farm? How do you hold your tokens? Who want to start?
I can start. Some of you might have read my adventure on SushiSwap. And if I elaborate how I got in there, it's since I'm not a developer, so I can't really go through the code and see if the thing works and there are any other loopholes. But what I can do is, as a financial professional, I can try to figure out what the risks are in that investment. Then I can try to find instruments I can use to hedge certain of that risk. And then I decide what sort of amount I'm going to put in. and what the levels are of certain prices when they move around when I really want to go out or put some more capital in. In the end, it is quite a tough decision, but it's the learning price you pay to some degree, but I learned an awful lot more by doing it than just reading about the protocol on the web.
Yeah, obviously, considering my entry statement, I did not put any money in any of those vehicles. I did read about it. Maybe I should follow Patrick's example, and maybe I would learn a little bit extra. The way I look at it is more from where does the money actually come from and go to. To me, the value creation is not that the protocol gets more value. That is basically, this is like a company giving out shares to their employees. Yeah, maybe all the employees now get rich and the company valuation goes up. This is what we see in DeFi space. But if the company doesn't make any money from the outside world, it will not prosper. It will at one point.
Yeah, I'm going to
run out of
interject
money.
there because we just saw like a great slide by Maxim about how much money they're actually making. So
Yeah.
I think that there is a lot of money being made in DeFi also at the protocol level. I think it's a very nascent space. I mean, you know, DeFi is less than 4 years old, and most DeFi protocols are less than 1 year old. And I would say that, you know, if you look at like another tech sector, virtual reality or augmented reality, they've been doing it for nearly 20 years and they still haven't really delivered the dream product. So I wouldn't say that I would say we're at the very, very beginning. And the fact that there are even, how many was it, 5 or 6 protocols that are making 30 million, 5 million, 1 million, whatever those numbers were per month, is a huge testament to the fact that they're actually working and that they're attracting real users in. Because a year ago, the discussion was, oh, great, we have a lot of protocols, but none of them have users. And now we have users and they're growing and they're making money. You know, they're able to charge, so.
Who is actually paying to trade on these exchanges? Everyone is trading on exchanges to get money. And the money that they get is not actual money. It's tokens that represent maybe part of the protocol. And as the protocol increases in value, you can hand out some of that added value to the people who support it and trade on it. But the question is, who actually buys these tokens to then trade on the platform?
Maxim.
This is a good question. Like, I'm not arguing that revenue is often shared in the form of a token. That's right. On the other side, well, it's not always right. Okay, if you're doing farming on Uniswap, you get 0.3% of whatever pool you are in. And if pool is, and I'm personally, because it was a question, we do farm in Uniswap on DAI Ethereum pair. So it's a kind of commitment of your stablecoin, which you actually at any given point of time, in the night, in the morning, in the weekend, in the Christmas time when nothing is working, for instance, Switzerland and Germany too. At any given time, you can go out of your stable coins, convert it to real money, and request a withdrawal to your real account. So it's a kind of only partially true that you get a token. You can convert it at any time, and people are doing it. It's, of course, a question of belief that the value of token will increase, then they keep it, and when they disbelieve, they dump it. It's a subject, actually, what Sentiment is doing, and I hope we're doing it quite nicely to measure fear and greed. But if the community believes in the value of something, there isn't value in it. I would go to extreme, say we put the value in even in our dollar, Swiss franc, and euro, where is there is real value there, as much as we believe it's questionable. or in the gold to some degrees also, we believe there is a value, or we got used to it over thousands of years, and it might change. Or I would love to see it changing in 5 years, and suddenly we see that there is much more value in these useless tokens, but it's a long way there. So portion of belief there is value in something, and if many people believe and they keep working on it, I think it's what makes us human, especially community society, so powerful, and the token has value. Yeah, we often don't know the real value of it, and it's quite often it's overvalued, and we see it constantly. But revenue, if even given in token, it has real value, at least to community who is running the project, because they double check the code, they in the government they propose improvements, they review the code, they deploy new contracts, they keep working on it, and it's in some sense it's a kind of chaotic and anarchic process. In another sense, it moves super fast. The learning and improvement cycle much faster than centralized entities. Okay.
I try to answer it in the financial terms we probably know best. I think there's sort of two circles. You have the protocols where you can put your money at work and you farm, and the yield you get, which is not really a yield, it's the token you get of that protocol, is your earnings. The way to get these very high APYs is that you need the second circle, which is retail usually, jumping on centralized exchanges or even decentralized exchanges and buying up those governance tokens. And this is what I mean with it's your responsibility. You need to look very close at the token economics of that governance token. And I think the revenue models of these DEXs is very real, and they do make some money because they take away revenue from the centralized exchanges, which is real. People want to trade, but you need to have a very good risk management and sense of selling out your farm tokens to actually capture the yield you can, or the earnings you get there in tokens.
Stani, I have a question to you. Can you answer where does the token get its value from? Stani, can you hear us?
Yeah, sure. So basically, I mean, eventually, all value is some extent subjective to the community. Of course, it really depends on. I mean, if you're talking about governance tokens, clearly there is a distinction of governing certain things in the protocol, but also governing, let's say, a smart contract-based system that holds value substantially. So when we look at the major protocols that are now in DeFi, they might hold basically over $1 billion worth of value in those smart contracts. And the governance token allows the control basically on how those smart contracts are upgraded and in the future changed. So in practice, it's in one way also kind of to some extent might be assets under management or assets that could be subtracted in value in terms of protocol fees. So we kind of tend to forget where the governance tokens are going, in the sense that we've seen very plain governance tokens where there is no, for example, fee distribution into those to those token holders or rewards. But there's basically models such as the synthetics model, where you are putting the token back into the system to collateralize it, or for example, in the Aave model, where you stake the Aave token into a security module to basically cover any kind of shortfall event in the ecosystem. Might be a exploit, bug, failed liquidation. And in that case, you practically are, as a token holder, bearing the risk of the protocol at the same time when you are participating in those risk-based decisions. But I think in the future, those different value points, let's say that there is some sort of reward mechanism, might be inflation, might be fees that are collected. And I think these protocols are growing quite substantially that they start to collect fees. But beyond the governance tokens, there's all other kinds of economies in the DeFi. For example, there is stable coins that has different kinds of functionality, especially in terms of lending and borrowing, and also in trading when you want to get exposure or out of exposure to a stable value. So I think like kind of like the whole categorization is quite difficult to establish. Really need to look at each token and what they're doing in the economy, whether it's a stable coin, it has some functionality. For example, in Aave, pretty much you deposit stable coins to earn yields. So and you obtain a stable coin because it gives you better yields than your bank. I could actually ask every one of your questions that who hold money in the bank, in a Swiss bank, how much you're earning on a deposit that is not fixed. Not much, right? But the same thing might be in US, rest of Europe. And then if you have an alternative that you obtain a stable coin and deposit into the DeFi protocol and earn, let's say, 3 to 5%, that is substantial yield, not even going into any kind of yield farming schemes and so forth. And on the other side, for example, there's borrowers that are posting a collateral, so they're borrowing assets, and that creates the demand and those interest rates. And for them, it's quite convenient because they're able to participate in permissionless markets, which can grow substantially over time period. And that's also liquidity for them. I mean, if they borrow stable coins, they use it in DeFi, but also they could use it in real life. So let's say you have a long position on Ethereum, or in the future, a tokenized form of some other asset that has been represented in Ethereum, and could be, for example, even real property at some beautiful day, and being able to kind of take equity out of that property in stablecoin and convert it directly to fiat currency and spend it in real life. That actually it's very expansive use case.
Okay, thank you. So now I'd like to discuss a bit where we are in the DeFi. Roger, you said that there was ICO bubble. It started. It had its peak, and then everyone dumped. Then you said we have another bubble. And do you think that this is already the end, because we are seeing all these forks, scams? What do you think?
No, I don't think we're at the end of the bubble, not even close. We have now, what was it, 30 billion locked into projects that are barely a year old. I'm sure that the greed of investors will allow for much more money to flow in before anything bad happens. The ICO bubble lasted about 18 months, give or take maybe, depending on when you start counting. It was several years, but let's go for about 18 months. And here we've had to take off about less than 6 months ago. We're still very much in the early phase. And there's a chance that, like, the word exuberance came up. I don't know if you know the history of this word, but it was Alan Greenspan who once talked about irrational exuberance, and it was referring to the stock market. And turns out that the Fed managed to print so much money in such a short time that actually the valuation then turned out to be more or less correct on the stock market, give or take a financial crisis. And maybe the progress that we see in the space will also catch up with the massive volumes that we see here and justify it hindsight. And I hope that is going to happen. I don't think it will, but it would be very nice. So to answer your question, I think we may be a third into the bubble.
To me, it's I'm looking out for the bridges between traditional finance and the DeFi sector, and to get into the remaining part of the bubble, I believe we need to see regulatory frameworks to catch up, regulators to ease the barrier or make it in some way possible for companies like us to serve clients, to move money into the DeFi sector. And I think, or I believe, that will be the push to the moon, so to say.
Yeah, I mean, I think there's two parts to your question. There's the token valuations themselves, which I'm actually not that interested in. Like, I mean, you can just pick a number in the sky. No one's able to forecast what these things are really going to be worth, and most of them should be probably pricing in 3-4 years growth from now, like you do. You know, when you look at any tech stock, you don't market it based on today's numbers. You look at it, you know, 3-4 years forward. And I think that's what people are doing in DeFi. So I don't think that it makes any sense to predict what the token prices are going to do, and I don't really care. For me, it's a question of, is the tech still going to be around in 5 years, and are people going to be using it? And for me, absolutely yes. Like, V1s of most protocols were out last year. They were, frankly, mostly unusable, very user-unfriendly and very clunky. And now that same kind of early gang of DeFi projects are about to release or have just released their V2s. Things are becoming easier to use, more digestible, and then, you know, you're starting to see, for me, it's the very, very beginning, and it's to see this much traction so early on and so quickly is a very exciting thing, and I don't think this is going away. I don't think it matters at all whether regulation catches up or not. I think it's really all about banking, you know, servicing those people who cannot access these products anyway. And I think that's also the most exciting part of it. Yeah, of course, traditional people want access to it now too, because they see everyone 5xing their money, but it wasn't really built for them in the first place. If they joined the crowd, fine, you know, but it wasn't really for them in the first place.
I would just agree with Mona that technologically, I cannot see, and when we see it from point of evolution, it has to go in this direction. So clearly it will evolve. There is some resistance. Maybe there will be more resistance from regulatory side, I can imagine. But it has to evolve. Our current financial system is just unsustainable. So many regulations, but still they don't regulate important points. So what's the point of regulations? And in crypto space, no regulations, but it's self-regulating. Remove bad actors very fast. You destroy your reputation, you're gone. You cannot do it anymore. We learn in ICO bubbles that you don't do it this way. And there are no ICOs anymore now. Now you build product, you show revenue, and then you raise the token. So we learned like in 3 years so much. And anyway, I'm debating. So it will, from a technological point of view, no doubt, it will grow. Valuations of tokens, I also have, I pretend to know, predict the prices, but honestly, I have no idea. And we haven't seen just real competition. Yeah, CasperLabs just presented. It's just one. There are there should be, and there are, I know, dozens. Polkadot with Kusama working another chain. Just what comes immediately in my head, because they're also here in Zug. They should show, and in Polkadot, we know technologically it's a very strong team. And once you see competition, then the evolution starts even faster. So this is where I think we'll see very interesting stuff is going on. Yeah? And the evaluations, I don't know.
Patrick, but I want to dig a bit into what you said. You said that if you would, let's say all the regulations that you would like to happened, what would we see?
I guess we would see an inflow of money that the DeFi sector cannot handle in the end. And the yields will come down very, very quickly to more of the yields we see in traditional finance. But I agree with Mona that it's not only the private banking clients that have access to these instruments, it's also the person who does his finance himself on his computer and enters into these contracts on its own. And that's for me then the difference, but it will not, if it opens up, the yields have to come or convert to the yields we see globally in financial markets.
Okay, thank you. So now I'd like to ask you this question about the DeFi primitives. Do you think that we will see more new inventions in the DeFi space? Let's say like the most basic invention is token itself. Like the success of token standard is amazing. Like everything now is a token, and because of the standard, every platform basically can talk to each other. Then we had more inventions like Stani, you guys are inventing borrowing and lending on Ethereum. Before you and before Compound, no one thought that this is important, because why would I even want to do this? But suddenly people want to do this, so huge invention to me. Then you went with flash loans. Again, another great invention that provided a lot of liquidity. So my question to you is, do you think that we're gonna see more of those innovations, or we are at the point where we have enough Lego bricks to have a good fun? Who wanna start? No, that was the question to any of you. Okay, let's.
Yeah, yeah, that's interesting, because like there's so much things going on, so many things happening, and past 12 and maybe even 24 months, there's like quite a lot of innovation. And I mean, most of the innovation is because there's an ecosystem that is becoming, kind of like expanding, because when we started to build the first lending protocol that we had, ETHLend, before that there was practically one investment fund, which was the DAO, and basically it had its own problems. And later there was one decentralized exchange, Ether Delta, and then we basically launched the ETHLend. So there wasn't much things to do, and also we probably had like 10-20 users in beginning of 2017. So that was the state of the DeFi. But as there's new things, innovation came up, like the Kyber liquidity, Uniswap, automated market makers, and a bunch of other stuff. You could build very cool functionality on top. And this is like something that expanded the ecosystem. And I think definitely we're not close to the peak at all, because there's going to be a lot of innovation. I personally have, with our team, like quite extensive backlog of things that we want to try out as proof of concepts and new features. And especially now with the Alpha version 2 that we're launching. But also I think like what makes the decentralized finance a bit different than we have used to see in traditional finance and even fintech is that now anyone can actually have the opportunity to build the next big financial application anywhere of the world. So permissionless access means also permissionless building. And this is a substantial different thing, because there could be someone, any part of the world, creating just slightly different formula that Aave has, and basically taking a lot of liquidity and getting a lot of success and network effects. And we will probably see a lot of this kind of action happen. And of course, like the challenge, of course, is how we make everyone to deploy securely, because this hasn't been the case this year, and it's very problematic. Because if people start to lose funds, decentralized finance starts to lose credibility, and this will be barrier for innovation. But besides that, I believe that there's still a bunch of stuff that could be done, and also after DeFi, there's just completely a lot of economies that could be built on chain.
Yeah, I have a view on this as well. I think it might sound a little bit controversial, but I think I don't think that most DeFi players who are building infrastructure actually invented anything. We're just kind of doing finance, which has been around for centuries, on chain in a way that is much more efficient and different. It's the how, not the what, that we that was the innovative part. So it's the fact that we're doing it without financial intermediaries, the fact that we're doing it trustlessly, the fact that we're doing it permissionlessly. That's the real innovation, not the what. Borrowing and lending has been around for centuries. Same with asset management, same with derivatives, options, etc. The part that I see most of the innovation in is really on the product, not on the infrastructure. And I think, like, flash loans are an example of that. One that I'm really fascinated about is how we basically stimulated liquidity by creating something. I think Uniswap pioneered it, but what I find fascinating is not Uniswap itself, but the idea that they created of being able to pool liquidity and pool risk, which now pretty much, I think there's dozens of protocols taking that idea and leveraging that idea. So I think it's really the product, they essentially productized providing liquidity, which is pretty cool, because prior to that, the only people who provided liquidity were banks with big balance sheets. So I think it's pretty much on the product side where we're seeing all the innovation, where we'll continue to see the innovation in the same way in traditional finance. It's always the products that are renewed. And like Patrick said, when the yields disappear, people are starved for new products, so people start to release new products. But the infrastructure, I think, are really the big plays, which I don't think are going to go away. They're really the bread and butter. They're the infrastructure which the DeFi industry will rely on for many years to come, I think.
I'm following very closely the traditional market, so the CBDCs is something I'm focusing on very strongly. And I was also quite vocal about it when China started roughly a year ago to post informations, what they do. And funny enough, exactly that example, pooling liquidity, I see this would be a perfect product that can be used in the traditional finance space, for example, for very small cap stocks, where banks have to, and I'm saying it, have to provide liquidity, and they really don't like to do it. They charge you a lot of money that you can sell some small Swiss company stock somewhere. But as far as I know, the holders of these equities, they would like to play around a bit. They would like to put it in a liquidity pool and actually get money for it by holding the stock and putting it into a pool. And if they lose some, or if they lose some of the stock and get the other side, that's fine, and vice versa. But that only works if you have a stable coin or a national stable coin like a CBDC that makes it work on, let's call it, a blockchain. Obviously, it's not going to be super permissionless, and this is centralized on one side of the coin, and it's obviously regulated and centralized on the stock. But the concept, the liquidity pools showed us, they are very, I think they would apply very well to some of traditional finance models.
Nice thing. Now I'm thinking, should I add or not? Because it was very nice kind of round trip, studying one new, and it's without adding anything to liquidity pools, which I do believe it's surprisingly one of the biggest innovations. We did not expect it 1 year ago. Now it happened. Crypto black swan. And there are other things which we're talking mostly about tokenizing of something, of tokenizing your activity, knowledge. And when we come into the level of knowledge, understanding, I do believe it can and should and must be tokenized, because when we spend our brain activity, the best way to get the highest value in the market, it's not negotiated with your manager of your manager and see if you increase your salary. There should be a direct way or a marketplace where you can prove your knowledge in a specific way and does not need to ask your previous who you worked for, what are your skills. It has to be clear, your skills. And in the area where we are in, analyzing financial markets, it's quite clear if, for instance, I look into someone else's research, I see exactly if he's knowing what he's talking about. I'm pretty sure Patrick is also, when he's reading someone else's report, what they're doing, he knows, okay, it's valuable for me, he knows it. The moment we come to tokenizing our knowledge in DeFi space, in the financial area, that could be the next breakthrough. I know that we are working on something and trying to create this kind of building blocks, because this was your question, building blocks. But I don't know, will it happen this year, next year? It takes a lot of effort because it's not so easy to tokenize knowledge. But it might be sometimes much easier because you can just directly tokenize knowledge in the way that you create a fund on Merlin protocol, or you participate in something. But I want to see this happen in the next breakthrough, that we are able, whatever we know, whatever we learned, and what has of value for others, to put as value on the blockchain.
Okay, thank you. So we have time for one more question. Yeah, do we have questions from the audience, or from the online audience, or from local audience?
I have a question. What is in the chat for TV? There is 14 questions? No, that's something else? Okay.
Okay, Bernd.
I have a question, but I think I need a microphone.
Yes, you can wait.
So I have a question on, Maxime said before that there's other interesting protocols like Polkadot, and we heard a presentation about CasperLabs. What does a protocol need that it becomes a DeFi protocol? Because I also saw in the charts that Bitcoin, when it was wrapped into Ether or on the Ethereum chain, sort of, in my opinion, triggered this DeFi hype as well. Is that maybe something that they need? And why is Bitcoin not a DeFi protocol itself then? If Bitcoin, the currency, is so interesting for DeFi. So those are two questions, actually. Sorry for that.
Well, I can my view on this is Bitcoin is not that relevant in terms of building decentralized protocols, but it's a welcome collateral that the DeFi space needs, that there is money or capital in the system to play around with. And what I always say is, not in the DeFi sector, but in the whole cryptocurrency trading space, balance sheet is the missing part. There is not enough dollar in the system, there's not enough balance sheet. So that's why I think the move from the Bitcoins wrapped into DeFi was just an accelerator, because the needed capital came over.
Yeah, well, Bitcoin will never be used as a smart contract. I think it's now obvious for everyone. It's not, it's destiny. Its destiny is to be the best quality collateral, which it fulfills fully. And as a matter of fact, I was reading just another week how it happens in different societies which become super successful and struggling to get success. And it's always switch between, there is a lot of property or ownership around. Once you can claim it and you can put it as a collateral to take risk, this is where society grows. And it was very interesting and enlightening for me. And then I realized this is exactly what happened in the crypto space. Whatever ownership you have, be it Bitcoin, Ethereum, or any other altcoins, or even there's another word for it, you now can either keep it and wait till it grows, or you can take risk. Say, yeah, this is my collateral I put on the table. And protocol, they take care of the things, and they let you do whatever you want. You can borrow money, yeah, you can borrow to the maximum leverage. You do whatever you want. The protocol will take care, it will liquidate you if you're wrong. And for this purpose, Bitcoin is really good one, and no need for it to complicate, and I think it will never happen. Now, for other protocols, what it needs to be to succeed, this is a very tricky question. And I think I always thinking that you can see the future. It's anyway difficult, but you can see the future if you reflect on the founders' kind of spiritual or aura or energetical background. So we know Ethereum, it's Vitalik, and there is some money part. Vitalik and some money part. So and whatever you see, this is just total libertarian freedom and his push to create, or his energy which goes through him and say, okay, this is a platform where you can basically do anything you want. Yeah, there are no limits to your creativity. So I think this has to be at the core of any protocol. If you don't have it, no chance to innovate so fast. And you have to be tolerant and able to fail, and fail frequently, and fail dramatically, like we did in Ethereum with the DAO 2016, dramatically, and there was a split and everything. Your protocol should be able to fail. Trying to control a protocol too much from failure, from forks, from fight or tension, it's a wrong direction. You should allow conflicts, you should allow tensions, you should allow people to experiment and to be able to fail and to learn things very fast. And I think this is only two. And of course, you need to attract developers. Yeah, sorry, yeah, this is the most important. And if these three are not existent, there is no chance for success. And maybe there are others which are needed, but I think these three, in my opinion, from observation, is the most important, at least what made Ethereum possible to become what it is now. Freedom for developers, and possibility to fail dramatically, not to be scared too much. Yeah.
Stani, what do you think? What does it take for a new platform to succeed? What does it take for a new platform?
Yeah, I think the kind of room to innovate, I think, like the functionality of Bitcoin is pretty interesting. When I was thinking of actually building something like ETH back in the days, I was thinking more of the actually idea of just borrowing other currencies against collaterals, and I was definitely thinking how it could be done on Bitcoin, but the functionality wasn't there that we have, for example, in terms of smart contracts. So I think the more the protocols are innovating and create opportunities to developers to build things, that's definitely will help. And pretty much I agree. I mean, I just wanted to emphasize that, but I pretty much agree with everyone on those points, like what helps. So I don't want to repeat them again.
Okay, so thank you very much for watching. My dear participants, thank you for being here. And I think we can end it. Thank you.
Thank you.